We've got on board with us Jonathan Bharat, joining in, the CIO at Probus Securities. And we also have on the show with us Paul Bartholomew, who's the Senior MD at S&P Global Platts, joining in on the show. Gentlemen, hi, good morning. Hope all of you are trying to stay as at home as much as possible and taking care. Jonathan, if I could begin the discussion with you, are industrial metals sort of presupposing supply bottlenecks as the economic activity gets going, and hence anticipating some sort of shortage in metals as and when we open up? Do you think that is what is at play?
Yeah, good morning. Look, I think it is. I generally think that we've got a major demand. Obviously, China is in there buying. Particularly when you look at copper, when you look at iron ore, you get a sense that there is a supply issue due to COVID. We're seeing restrictions coming out of Chile, restrictions coming out of Brazil. As a result of that, with China still buying, you're seeing this little bit of a supply crunch occurring. So I guess while demand side there, we're not supplying enough, prices have reacted, and that's why we're seeing copper and iron ore at these prices. And also we're seeing those prices being sustained. So we get a sense that prices can continue to move higher, just purely on the supply side. When COVID changes, perhaps we'll get more confidence and it'll go up further. So at the moment, we are seeing a relatively bullish picture for the, the base metal complex as well as iron ore.
Sure. Paul, hi, morning. If I could come to you as well, commodities have been the best performing asset class during the rally, be it gold, be it crude, or for that matter, base metals of late. While an asset like gold rallies because of the uncertainty, which is understandable, how is it that you would explain the rally that one is seeing in industrial metals by pinning it only on Chinese demand?
Yeah, as Jonathan sort of mentioned, there has been a few supply issues as well that have helped support prices. But I guess I look specifically at metals, steel, iron ore, and iron ore was $107 a ton, I think, yesterday, which is remarkable, really, and it's been pretty strong all through Chinese New Year and through the various stages of lockdown. So it's not just a sort of supply issue; it's also the fact that China is producing a lot of steel. Our view is that China will produce 2% more steel this year than last year. It seems to be recovering. I think sort of industrial activities around about back well over 90%. There's obviously a lot of infrastructure stimulus going in that we're now seeing sort of flowing through. So China's looking okay. It really depends, I guess, on some of the other countries in Asia, which are still sort of coming back slowly from the various lockdown stages.
But Paul, given what we're seeing in China, do you think that's sufficient, though, in order to really keep those prices above 110 on iron ore, steel above 500, the kind of push that we've seen on the construction sector there, for example, vis-a-vis, the rest of the world, which is still wondering whether they're in for a second wave?
Yeah, well, we're having a second wave in Melbourne at the moment, and that, you can already see sort of how that dents things. But I mean, there's obviously going to be some fluctuation and various sort of volatility. Sometimes this time of year is a bit of a weaker month in China due to wet weather and everything. But I think there's going to be some weak sectors that are going to affect a lot of different countries, like manufacturing, for example. That was already in the doldrums before the virus hit, really. So I see that particularly impacting some of the more export-focused countries like Japan and in Europe, possibly Germany. So I think there's still going to be some sort of fundamental weakness in those areas. And I think also in exports, obviously India's been trying to export a lot of steel. The Indian companies that you showed at the beginning there, they're lifting back their capacity utilization again. But I think it's a bit of a challenge if you're going to rely a lot on exports, because everybody's doing the same thing. That creates price pressure. So, I guess in an ideal world, everybody could rely a bit more on their own domestic economy, but obviously they're sort of coming back slowly, and the confidence aspect, I think, is going to take a long time, to come back before people feel safe to go out and buy cars and washing machines again.
True. Jonathan, how would you read into the rally that we've seen on the Baltic Dry Index, implications that would have on iron ore costing, subsequently, on steel pricing as well?
It's always good to see a good bounce, there's no doubt about it. That actually gives us a little bit of confidence that international trade's occurring, when you see that demand. So I think it's an encouraging picture. I guess one of the key things that we're all thinking about is the sustainability. Sustainability of those freighting rates, to see whether they will continue, and also the sustainability of those economies to recover. We've always discussed about this V-shaped or the U-shaped recovery, a V-shaped recovery in confidence, yet a U-shaped recovery in terms of economic performance. And we still think that we've got to be cautious about a lot of this because, we've got these second waves coming through, and obviously we're feeling the pinch, in Australia at the moment, and whether that sort of reverberates through other economies is something there. But I guess at the moment we've got to run with the confidence that we have. We've got to make sure that that rates will continue to move high because that is a very confident thing, and that demand is there, the demand stays there. On one side we can see that we're seeing economic performance occurring, but we're also seeing people very cautious because people are moving, into gold as a safe haven because we've seen such a dramatic rally there. So it's good to say that we're doing things, but people on the other side are saying, well, what happens if? And that's why we're seeing this interesting thing about base metals, moving higher, and then all of a sudden gold also moving higher. Is that disconnect that people still widely concerned, of a second wave and how that really will affect the economies further down the track.
Jonathan, gold is considered to be a safe haven, but some would say that is 100 years ago or 50 years ago or 25 years ago, when the options to store and conserve something digitally was not available. So do you think somewhere we must recognize that gold, which was considered to be a safe haven, was considered to be a safe haven because digitally you were not able to save and store a lot of things which you can now. So as a result, the appeal for gold for a long-term investor will go down.
Look. I mean, I think whichever way you look at it, I mean, the market where there are people who are always bearish gold, right? And there are people that are bullish gold, and obviously the bullish gold people like myself, are confident the prices look good. But you also got to look at when we look at the demand for gold, physical gold, perhaps from an Indian point of view, the wealth that has been created through record prices within India and the stability that creates within the economy because everyone has some gold somewhere. And when you see record prices, paid for gold at the moment, it's reinforcing that sense of stability that people are actually seeing in the metal. And I think that that's carrying through quite nicely, where we're seeing spot prices move higher. So I guess as a store of value, people are starting to recognise it because they're actually seeing prices move higher and at record prices. So they're saying, well, this isn't a bad investment. Plus, it's a store of stability with my own home economics because I own gold. And I think that's played out very well and very dramatically in India, who are the world's greatest hoarders of gold. It creates that stability, and that sense of confidence that if anything happens, they have their holdings. So yes, I think there is this play at the moment which we're running with that's seeing gold higher.
Paul, I'll throw two perhaps contradictory points at you. One, the real demand for metals, which also has been a function of India's GDP growth and China's GDP growth for the decade gone by, which was north of 5 to 6% on an average. That will come down drastically. That's the bearish side. The bullish side, Paul, is that dollar index is speaking out. If the dollar index moves down, historically it has acted as an indicator for money moving back into risk, which includes metal. That's pure price action, not in demand action. What do you think within the bullish and the bearish argument which I just articulated, Paul, deserves a greater degree of attention?
Yeah, well, I suppose from the perspective of looking at the market, it's sort of less from an investor perspective. But I think as far as sort of China is concerned, and obviously that's the big consumer of most of these metals. That I think the fundamentals are very, very solid. So we've sort of looked at both. Just recently looked at sort of the outlook for steel, alumina, aluminium, iron ore. We do this sort of Q3 outlook, calendar Q3 outlook, and it's all very sort of very, very upbeat. Because capacity is sort of coming back on, aluminium smelters are being sort of turned back on, so the alumina demand sort of picking up. So, and as I say, steel's on track to be more above 1 billion tons this year, which is why you've seen a big jump in iron ore prices, because it doesn't take much of a sort of supply sort of flashpoint like we've sort of had in Brazil, for example, to suddenly find that iron ore prices are pretty strong again, because China's producing sort of more, in its capacity across many, many different metals is actually being sort of lifted more than, well, at least earlier than some people expected. So I guess I'm sort of looking more at the fundamentals from an investor perspective. Probably Jonathan's better place to answer, but I think from that sense, it's pretty solid. And as I guess all the other countries like India and regions like Southeast Asia switch back on, that's certainly going to sort of help support demand.
Okay, Paul, Jonathan, gentlemen, great to have you on the show and get in perspective on what's really going on with commodities or not.